seasonal trend. So I don't know. I mean, it's got to be, I think, significantly below 100 to see a big move down in rates, and significantly, above 150 to see a big move up in rates. But it's really, you have to look at these numbers over the long term. The long term is much clearer, that we are on a declining trend in job growth, right? And that really is important, and it shows that we're going to be on a declining trend in real GDP growth. And we're moving from a world of 2.5% to 3% GDP, which we've really enjoyed since the pandemic, to one where we're going to probably be between 0 and 2 for the next few years. And let's hope, we stay above 1.
What do you make, though, of continuing jobless claims continuing to nudge higher? Does that give you pause and concern about today's number?
So way back in the day, decades ago, Anne-Marie, when I was a young quant modeling interest rates, the moving average of the unemployment claims and the continuing claims was actually one of the few decent leading indicators for interest rates, meaning as that number continues to creep higher on a consistent trend basis, it generally points to a slowing in the economy, which generally leads to rates falling. Right? So I know there's a lot of panic about the fiscal situation in the U.S., the gigantic amount of supply we have, term premiums going up in the U.S., curves steepening in the U.S. and globally. But you know what? What really matters is growth and inflation. And if the growth side globally and in the U.S. is flagging, that will certainly put a ceiling on global interest rates, on U.S. interest rates, on real rates. So I'm sticking to our guns here. Anything 4.5% to 5% on the 10-year Treasury is the real oversold buy zone. 4 to 4.5, where we're in the area right now, and we're at the high end of that, is still I think over the longer term, a relatively attractive entry point for interest rates.
I'm glad you went there, because you talk about global rates, and rates should get a bid if there is slowing growth. What are we talking about? Is it 2 years and 10 years? Is it also 30-year yields, considering some of the questions around what actually is driving that particular trade?
Yeah, I mean, the curve will steepen, right, in that kind of recessionary, significant slowdown scenario, like it always does. I mean, the curves have steepened a lot already in the U.S. We're 100 basis points, twos bonds, which isn't steep historically. And so, yeah, you could make the case, Lisa, that, if right now there are 100 basis points of Fed rate cuts priced in for the rest of our lives, right? That's it. And it all happens in the next 12 to 18 months. And then, the forward curves are really, really steep, meaning rates are poised to go up basically back to 4%, from 3 3/8 over the next 5-10 years, and part of that is just maybe term premium, but it's
Mike, can I ask
the
you
bonds
something?
are cheap here, and 5-year would fall. That's typically the 5 and 7 years, the fulcrum point where you want to be involved, you want to have some duration in that point to hedge your equity risk.
Just really quickly here, Mike, a couple months ago when we had Liberation Day, or less than 2 months ago, you came on and said the world has changed. Is the world the same that it always has been, and some of these correlations actually are going right back to where they were before?
Yeah, I mean, I'm not a big believer in the correlations changing. I mean, we've looked at correlations between stocks and bonds for centuries, Lisa, and it's zero, right? And the only time they're positively correlated are when you have inflation going up, which we had in 20, 21, 22, and that's why you had that big sell-off in stocks and a sell-off in bonds. That has happened in past periods when inflation goes up. The other time the correlation changes,
Money day, money day, money day.
and in those environments, the correlations almost always go negative.
I'm literally just
Bonds
grabbing up.
rally when stocks sell off.
As you
So
can
that
tell,
balance
I've
here
been a bit ill this week,
makes it
but
actually work
um,
in a recession. And
got to give you guys an NFP
I
live
think
stream
it's
at least. Do you know what I mean?
That's why the
Got to do
PCA
at
is
least an
coming
NFP
in
live stream. So
below
we're here now.
away
Um,
from the May
yeah,
payroll.
realistically, I'm not looking for much today.
Ira Jersey is here, of course. Stephanie
The
Rossi
reason
is
why I say it
here.
looks juicy because it's pretty simple and straightforward what I'm looking for. It's a daily time frame play, similar to the one last week. Just looking for looking for a move lower and a continuation higher. That's it. The only thing that's a little bit tricky right now is the DXY. That's the only thing that's tricky right now. But let's just wait for the move, innit? Once the move comes, then we can make a decision. So realistically, you know, we held this hourly candle prior, and then we had a short move, right? Then obviously we've rejected straight away and pushed back up, right? Which is also important to understand. Right here, we've got this sort of trend line, if you will, right? That's formed right there, right? I kind of want to see that get violated. So if the news comes out and we push up, which I'm kind of anticipating we probably will, first is this imbalance, and then there's this breaker here from when was this, Wednesday? But ideally, looking at the hourly time, I don't want to see the candle close here or here, right? I want to see the candle close inside this hourly candle, you know, similar to this. I don't mind how large the spike up is going to be, but eventually I do want to see these lows. Vice versa, if we just go straight for the lows, that's also okay. But main thing today is going to see how the daily candle closes. That's what I'm mainly looking for, right? It's how, sorry, not the daily, how the hourly candle closes. Okay. To be honest, I could have taken this short here on gold, but I was thinking, let me just wait for NFP. Right, the short setup idea was off of this half-hour candle. Obviously, it's playing out now, and I do think NFP is just gonna push dollar up. Right, but you know, we'll see how that does. The predicted is 126k, so it's actually worse than expected. Obviously, higher results mean that they've created more jobs. So if it's lower than the previous, the forecasted is lower than the previous. So overall, it's negative for the dollar, right? But we'll see. We've got about a minute left. I just don't see this weekly candle being bullish. I just don't. But again, you know, I could be wrong. But other than that, let's just see. We're about a few minutes. Let's just have the DXY over here. I might just go for a split screen today. Alright, well, 30 seconds. 30 seconds. Let's see what gold does as well. I'm going to set some alerts for gold. And then, yeah, we'll just go from there. I do think gold's definitely coming for this low. I don't know if it is going to come for this low, though, but I think it's definitely coming for this low. So let's see. Let me remove this. Okay. Dollar's up. Gold is dumping. Gold is dumping. Let me turn up Bloomberg a little bit as well. Gift says thought gold would be bullish already with Russia and Ukraine intensifying again. Yeah, you know, Gift, I agree with you, but the thing is right now is the dollar, well, recently anyways, the dollar's been so weak, right? So weak that it's difficult for gold to compete against, you know what I mean?
139,000 jobs created. The expectation was 126. We do see a revision down to the numbers for April to 147,000 from 177,000. So the weakening trend continues.
Alright, there goes gold. Well, to be honest, it's everything we expected it to do so far. I'm surprised how nice the candle is. You know what I mean? It's a very forgiving candle.
That is 20,000 what was expected. The net revision over 2 months down by 95,000. Labor force participation rate is a little bit lower, 62.4%, and the U6 7.8%. Average hourly earnings strong, up 0.4, which pushes the year-over-year rate up to 3.9% from 3.8%, so stronger, maybe a little inflationary numbers on that side. No change in weekly hours, 34.3. I'll look into the rest of the numbers, Lisa, and get back with you in just a second.
What you can see is not really a whole lot of drama, but you do see in the bond market a lift across the board. Michael McKee, stay close. We're seeing in the 2-year space in particular up now 5 basis points to 3.
1 second, let me get some tissue.
7%. That 2-year yield definitely getting a lift. When you take a look at stocks, it does turn out that good news is good news, holding on to those gains as we do see those estimates come in above expectations. That said, the revisions taking notice given the fact that there was a downward revision from 177,000 in April to 147,000. Nonetheless, all of this viewed more broadly as confirming that there is nothing falling apart. Stephanie Roth of Wolf Research is still with us. Stephanie, your take.
Cool. I would not. It wouldn't be smart to sell gold right now, or to even buy gold right now. It's not a great idea, because the thing is, obviously, you know, we've had NFP come out right now, and you know, as I've posted in prior videos, right, on how to look at or how to trade high impact news, right, you need to see liquidity, right? You need to see a low or a high taken, right? So far, we've just about taken this morning's lows, right? Is it anything really all that significant? Not really. At least for now, anyways. Right? At least for now, it's not anything all that significant. Like I said, we need to see how this hourly candle is going to close for the dollar here. And that's what... Ooh, look at that. That looks beautiful. This looks like a beautiful buy, guys. Right? So looking at how we reject, right? And I want to see this low get violated. Okay. So right now we've rejected higher. So far we're going to plan. Okay. 8-hour candle looks decent. 4-hour looks decent. Hourly looks decent. Right? I want to see this hourly candle close, and then we can look for an entry. Right? So far, what we can work with is this 15-minute candle as a potential breaker. Right? Obviously, it's not formulated yet, but you know, what I'm doing is just trying to forecast where we're gonna potentially find an entry, right? So this looks like a perfect, you know, those perfect FU candles, if you will, right? Even look at GU as well, played into this hourly candle, quite smooth, in fact. Quite a smooth play into that hourly candle. I want to see higher prices, really. The only problem that I'm kind of seeing a little bit is gold. Gold's not done enough at all. Right? Gold has not done enough at all for me to potentially buy it. But EU, looking at EU, it looks like a pretty solid buy. We've taken out yesterday's low. Right? Realistically, you'd want your stop beneath Friday's low. Realistically. Right? You could put your stop beneath Wednesday's low. But that's a little bit more risky, but you can definitely put your stop beneath Wednesday's low, because technically that is the 4-hour high low to higher high. We just about had a higher high yesterday as well. But yeah, I don't really want to see higher prices on the dollar right now, but let's just see how it goes. So yeah, gold's not done enough just yet, guys. It's not done enough. What's interesting is we've played back into the half-hour candle and we're rejecting lower. Need to see what the dollar's gonna do, man. Even this little breaker candle that I was formulating, it's gone out the window right now. So yeah, we have to wait for this hourly candle to close. Okay, this hourly candle potentially NY open, NYSE open, and then go for there. I mean, you guys know NFP, you know, it's going to push up, it's going to push down. It might push up, or it might push up and then push back down again. Like, we don't actually know until we see it play out. So
forecast.
We just got to chill for now. Just keep monitoring.
Primary metals, we checked that out. The steel mills, 1.3 thousand, 1,300 additional jobs. And fabricated metals, same number, so no impact from tariffs there. Construction up by 4. Retail jobs fell off by 6,500. Warehouses and couriers, people were looking at that because of the idea of pulling forward orders, and we do see slight increases in the couriers, 6,500, a drop of 5,100 in warehousing. Government, though, interesting number from the federal government, down 22,000. Of course, we have to double check and make sure that's not the U.S. Postal Service, which it mostly is, but federal government except the Postal Service down 15.8 thousand. So we're starting to see some Doge cuts there. The 3-digit unemployment rates, 4.244. That is up a little bit from 4.187, but not even worried about.
All right.
The reason it looks like unemployment
Yes, Brian. How you doing, my bro? Money day, money day. You good?
696,000. The number of unemployed rises by only 71,000, but the labor force falls by 625,000. That may be the story of this.
So far, there's not enough in here yet, right? Emphasis on yet. Right? There's not enough yet, but it doesn't mean that they won't be. He's flipping back down. If you guys are feeling a little bit more risky, right, it does seem like the dollar is going to take out this high, right? So if the dollar is going to take out that high, the news high, you could sell gold, right? You could go in for a little scalp on gold.
Yeah, I think the big takeaway is slowing, but still a strong labor market.
Like, I would agree now. But am I taking the trade? No. I'm not taking the trade. I'm not taking it. It's just high risk. It's just unnecessary.
This is part of the strength coming into it. But I smiled when you asked the question to Stephanie.
Because the thing is, this can flip either way.
There'll come a point where we'll talk about
it can flip either way.
And this labor market report, and it will be validating a trend that we may be concerned about. And that will.
What are you guys looking at? Gift, Brian. What are you guys looking at the moment?
Absolutely agree with that point. It's really the pausing point that we're at here with this market report, not really moving us either confirming the concerns that we had a month and a half ago around a recession, or validating the response in financial markets that, the peak of uncertainty is over. I think we're still in that uncertainty environment.
Nah, for sure. Letting it settle down. I mean, if you got a play account, I would sell gold still. If you have a play account, I'd sell gold. The volume looks really good to the downside. Higher time frame also aligns with the downside as well. Dollar's pushing up as well. It's looking like sells at the moment. Yeah. If you want to risk it for the biscuit, sure. Does this follow my rules, my playbook, my models? No, it doesn't. And I don't really feel like taking a crazy risk today. Can't lie. I want to find a nice move and then go in. And right now, I want to see what the dollar does. Like I said, I want to see the hourly candle close. Yeah, that's going to give me the evidence that I need. I've always said that. How about you, Brian? What are you looking at? Gold looks heavy. Like, if I were to try and find a setup here, right? AKA potentially force a trade, yeah? What you can do is play the low. Right, technically play the low of this candle here. Why? Because there's more potential to the downside, right? Gold can definitely still drop. And 100 pips, give it 100 pips. Target the lows. Right. Could get a 1 to 2. Down here.
Yeah, I think the honest answer
Yeah, you get about a 1 to 2 on this.
The new data that's coming out, whether it's the challenges from the legal perspective, whether it's the change in terms of the negotiations, what is actually in those negotiations in terms of how much they relieve the uncertainty.
Yeah, you could do that.
We just don't know. And I think there is a cooling effect in the interim. It doesn't
And
show up.
being completely honest, you know, the move lower that we're seeing now is not anything out of the ordinary. We were looking at gold dropping on the daily anyways.
On the trade impact.
My whole thing is, you know, if the DXY wants to be bullish, right, that begs the question, right, are we going to take out Friday's high? Right, that's ultimately is the question. Are we going to take out Friday's high, which is that candle that gave us the move lower, right? We'll see. We'll see. Right, if this candle closes incredibly bullish, then I'll have to look back over here. Right, this 4-hour candle, potentially target Wednesday's high. Right.
And so the Fed's in a good spot here to wait and see. Will they be lagged? Yes, this is kind of the, impact of moving from forecast dependence to data dependence, is that the Fed has to be reactive. And so they'll be lagged. The issue for the markets will be, will they aggressively catch up if they are indeed?
Brian says EU swept and tapped 2-hour OB, hoping for it to go up from here. 2-hour, yeah. Let's take a look, bro. This candle here on the 2-hour. I mean, it depends on how big your SL is, bro. I can't lie, like, your SL minimum, in my opinion, has to be beneath Wednesday's low, right? Ideally, right, if you are going to have a safer stop, it needs to be beneath Friday's low, right? But you could put it beneath Wednesday's low, and that's okay. But I do see what you are trying to play there, bro. It is valid, and it does make sense.
Figuring out how much money they're making, but what companies are doing with what we're hearing about in the mess in real time in a way that this data cannot tell us anymore, Jeff.
Yeah, I mean, there's a long history to the payroll report in terms of moving the bond market. Has it lost some of its efficacy? I mean, certainly, we've come out of this period where inflation has been the bigger driver. Clearly, that has been the story of the last.
Let's see if you're right, bro.
The payroll report isn't really the kind of preeminent data release on inflation. It has an important component with regards to wages and wage inflation, as it was just highlighted.
All right. So if anyone is feeling a bit more ballsy, wants to take a high risk trade on gold, you can do that now.
More confirmative on those trends and solidify the expectations for the Fed. That's where the linkages in the
Damn.
market comes from.
You can take that trade. You can take that trade.
We can kind of think of tariffs and the tariff shock as more of a supply side. It has both elements of the supply side and demand side. When you think about economic shocks driving financial markets that are more from the supply side, yes, the labor markets kind of lose their primacy of being kind of the preeminent.
Jeff Rosenberg of BlackRock, thank you as always for being with us and giving us some insight, pointing to that key metric coming out of the report that the May average hourly earnings rose 3.9% year-over-year.
All right, guys, if you're in the stream right now, welcome. Come say hi. Come say hello. Don't worry, I don't bite. Everyone else in here doesn't bite either as well. If you're new, don't forget to subscribe, hit that like button, and also join my free Discord. Link to the free Discord's in the description box down below. Okay, if you enjoy this type of content, that is. Right now we're looking at gold. Right, my post inside the Discord, like, look, gold on the daily, we should see lower prices today, right? It might also bleed into next week, which means we may just get the drop today, and it may be a slight pullback, but we may not get, the new high today. So maybe potentially next week, then we get that new high. But for now, this is what we're playing with. This is what we're working with.
Well, we've been thinking that the Fed was going to cut not until the fourth quarter at the earliest this year, and because of exactly what you just said, Lisa, which is that the
Brian, it looks like that that play there is playing out, man. This is why, for me, I just want to see how the hourly candle is going to close. Like, the hourly candle closure is going to tell me a lot more. Obviously, you know, like Brian says, he's got it set up on the 2 hour, on the H2 short, play it. Do you know what I mean? But for me, especially on these red folders like NFP, I really don't like to trade it all that much, right? At least, you know, off the jump, I want to see a move happen first, right? I want to see something happen first. I want to see that hourly candle closure. I want to see how NYSE is going to open as well, right? That's going to help me a lot more in deciding direction for the day, right? Because even though, let's say, for example, GU, NFP came down, pushed back up, came down, it can still flip bullish, right? This hourly candle can still flip bullish. We still got 13 minutes, right? We can still flip bullish. And on the flip side, we can pull back and then drop some more. But I need to see how this hourly candle closes, for me personally. So it looks like we could get a potential pullback here and a continuation higher. So let's see. Yo, I haven't had a cold in like 2 years. 2 years, no bull. All of a sudden, I've got a cold. I haven't had a cold, guys, in 2 years, but all of a sudden,
And that is the ultimate question. And Ira, before we let you go, there is a question about if
alright, so dollar gonna push up from here.
more and their wages are going up, does this mean that it's not just a one-time price shock, but that potentially in response to increased costs from tariffs and other supply chain potential inefficiencies, that companies could continue to raise prices into the future? That longer-term inflation, that really is one key question.
Well, that's very likely, and one of the reasons why you've continued to see inflation, particularly in the services sector, which really has been driving inflation over the last 2 years, is the wage input to those prices. And with wages growing at 3-ish plus percent, then businesses need to pass that along, and that's one reason why I think you've continued to see the service sector.
The one thing I wouldn't want here, guys, is a doji candle closure. If the hourly candle closes doji, then I don't know, guys. I'll be honest. If that hourly candle closes doji, then I don't know. Okay, I just don't know, and I have no shame in admitting that.
Unemployment rate held steady at 4.2%. Data for the prior 2 months were revised downward by a total of 95,000 jobs, signaling employers are cautious about growth prospects as they weigh the Trump administration's economic policies. Meanwhile, President Trump and China's leader Xi Jinping have agreed to further trade talks aimed at resolving their disputes over tariffs and supplies of rare earth minerals. The two spoke yesterday by phone for 90 minutes. Senior U.S. trade advisor Peter Navarro spoke to reporters just a few minutes ago and said the talks would happen within the next 7 days. And four-time NFL MVP Aaron Rodgers is heading to Pittsburgh. The free agent quarterback agreed to a one-year deal with the Steelers, ending months of uncertainty around the future of his career. The 41-year-old
Look at gold, man.
2 seasons with the Jets, who the Steelers will face in week 1 of the upcoming season.
So what I'm saying, man, NFP will just have you just twerking. You enter a sell, you enter a buy, you enter a buy into a sell into a buy. It's a mess, honestly. But like I said, if you do want to take a sell, it's not a bad area to take a sell. Just give it 100 pips minimum. Yeah, it's not a bad area to take a sell on gold. Should I take a little sell? DXY looks pretty bullish, man. Oh, guys, this is going to be so dumb. I can just tell how dumb this is going to be. I'm contemplating taking a little 0.0001 sell for gold. Or should I leave it? What do you guys say in the chat? Should I take it or should I leave it? Gift says take it, bro. Small lot. Nah, mate. This is silly. Take this gold short where it is. This PA doesn't look good, man. Look, we got a doji candle right now. All right, let me see it start coming down a bit. If I see gold start coming down a bit more, then I'll take a little small lot. Yeah, that'll be the deal. But for now, I ain't taking nothing. Like looking at EU, this is good buy conditions, man. You know, when I look at EU, this is giving me good buy conditions. Like EU is 100% giving me good buy conditions. If we're looking at in terms of, you know, trading high impact news, we look for liquidity, we look for structure, and potential continuation. Right? Obviously, we don't have a continuation play formed just yet. It hasn't formed yet, but just, you know, when I made that video, was it last year I made that video? Yeah, it was last year I made the video on how to trade news. The main thing is liquidity, right? Like, have we taken out a significant high or low, right? And we've taken out such a significant low here on EU that this should be a buy. Like, and on the daily time frame as well, you know, 4-hour structure is bullish. Like, for me, this is a buy, right? Just off rip, for me, this is a buy. But again, you know, I could be wrong, but I would rather buy EU right now. Even GU looks like a pretty solid buy. So again, we're just going to look for a continuation. Wait for the hour candle to close. We're going to see by NYSE if we get anything. If we don't, then we'll still wait for a continuation play. I do want to focus a bit of my attention on gold today, though. I'm not going to lie. I feel like yesterday was a real nice short on gold, but you know, because I was trading EU yesterday, I didn't really pay attention to gold. Gold had a really nice move later on in the day.
Across the board, up about 0.8% on the NASDAQ, S&P, Russell flying up more than 1.2%, counting down to the opening bell, 1:30 p.m. Eastern. President Trump signs executive orders. Monday, Apple's Worldwide Developers Conference. Wednesday, we get CPI. Thursday, PPI and another round of jobless claims. Plus, Tesla's robotaxi launch in Texas, which has new focus on it. Stephanie Roth of Wolf Research. Thank you so much
Let's see.
for being with us for the hour. What's your takeaway from this payrolls report?
Yeah, I mean, the data was fine. It tells us the labor market, the fundamentals are pretty solid. And by the way, this was the month that should have generated the most uncertainty from an employment perspective.
Gold's dropping. It's looking a little bit better now.
Cause a recession as a result of his tariffs. That said, our medium-term outlook is the economy should be fine. And the risk to growth next year is that we could actually see above-trend growth in 2026 as the reconciliation bill starts to hit and the impact moves from tariff headwind to reconciliation bill tailwind. That's it over the
Alright, let me take this little wee gold short then. Since Gift wants me to take this short. Let's take this terrible idea of a short.
Tariff negotiations are going to start heating up. Bond yields.
Let's see if it plays out. If it does, happy days.
So in the near term, market risks are a little bit elevated, even though over the medium term, the economy should be.
My TP is gonna be the daily candles low. So that's about here. So TP is currently, what's that, 33, 35? That's current TP, 33, 35. Taking it. We got 4 minutes.
You're going to have the Chinese and U.S. delegations sitting down. To Stephanie's point, you have the heating up of these trade negotiations, and potentially we could see more of the parameters of what a deal could look like between these two economies.
We'll carry that conversation forward. Coming up on Monday, Keith Lerner of Truist, Abby Yoder of J.P. Morgan, Wei Li of BlackRock and Vinu Krishna of Barclays. But first, coming up,
It says gold is moving mad. Yeah, just don't go in with a big lot size, bro. Scalping all the way right now. Yeah, you're nuts. You're nuts. I mean, look, bro. If you got a scalping strategy, then, you know, go for it.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
And Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity, ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
In case you missed it on Balance of Power.
If we're going to get all this revenue from tariffs, why would the president be pushing for higher taxes on anybody? Because our understanding is for the wealthy, he's looking at a new rate of 39.6%. And I thought the Republican Party didn't stand for that kind of thing.
Well, you realize that the tariff revenues doesn't count toward the reconciliation numbers. Don't ask why. I can't understand why. We're running at like 20, 25 billion a month, and they're not counting it, but we'll leave that aside for another day. This is Washington. They have their own accounting practices. So the president's trying to make sure he gets no tax on tips, no tax on overtime, and no tax on Social Security. And if he says, look, the richest Americans, remember, he cut it from 39.6 to 37.
All right, we're still
so
waiting.
Just goes back
Hourly
to
candle's about to close in 10 seconds.
You know, I'm in favor of that. I think it's smart.
Don't miss Balance of Power live every weekday.
You know,
Bringing you up-to-the-minute geopolitical news whenever
if the dollar
and
closes like
wherever
this,
happens.
which it looks like it will, that's a pretty bullish looking candle, man. That's a pretty bullish looking candle. I can't lie to you guys.
As they maybe make up 30 minutes until the start of trading. I'm Matt Miller.
I'm Shanali Bassett. Katie Greifeld is on assignment, and Bloomberg
It's a pretty
opening
bullish
just
looking
starts
candle.
right now.
And for gold, looking at the hourly candle, it's not a really bearish candle, but it's a candle enough where you can say, okay, cool. We may get potentially the high of the hour somewhere here and then stretch lower. Obviously, clear target is going to be the prior hour candle's low, right? So, I mean, gold is coming down right now, so that little short that we did is some prof. It's not looking bad at all. Gift, how's the scalping going, bro? You must be nice. You must be nice right now. Gold's moving.
I mean, that's really all I'm watching as well, but we have to show you other stuff. So here is Broadcom, a chip result, the shares are down 3%. Shanali, we are focused, obviously, on this.
Gold is dropping like it's hot.
Daddy of all economic statistics was served to us, and it was going in the right direction.
Yeah, it looks good for jobs. We're going to talk about that May jobs report. Matt had mentioned the U.S. added 139,000 jobs, and that beat expectations.
What do we say? Entry 33.56. Okay, so that's around here. Trying to recover losses from this morning. You were trading this morning? Damn. Bro, you should never trade NFP morning. Like, ever. Like, obviously, you know, you have your own experiences and maybe trading NFP morning has been good to you, but bro, NFP mornings are one of the most biggest wastes of times you can do. Just trade NFP morning. Because NFP is going to come and most likely wipe out all the morning's movement anyways. Oh, this looks pretty bullish here on the DXY. Dollar's looking really bullish on the 1 minute. Low, sweep, push up, new high, play, imbalance. Oof. Yo, the LTF looks really bullish on the DXY, you know, really bullish. Alright, so to be honest, we have to start looking at Wednesday's high for the DXY. Obviously, this is not good news for EU. If I'm looking at Wednesday's high on DXY, then I need to look at Wednesday's low on EU. But let's see.
Sign that while things are slowing down, they're not slowing down too much. And as Ms. Roth pointed out, 4.244% on a 3-digit rate of unemployment is still very good. It is not anything that the Fed is going to have to worry about. You can see there the average hourly earnings numbers that Matt was talking about. Now, 93,000 jobs taken away over the last 2 months in March and April. That does also feed into the narrative that the economy is slowing but not falling off a cliff. If there's one takeaway from this that I thought was interesting, it was the drop in the labor force, 625,000 drop. That's the biggest since 2023. And the question we have is that because the administration has shut the southern border and we are not seeing a lot of illegal immigrants come in who then get into the labor force and take jobs? We did see a big drop in the number of people who got jobs in the household survey, which is one reason the unemployment rate stayed about the same. But it's an unanswered question at this point. And then finally, what were the biggest movers? Well, federal government finally shows some drops of 15,800. We've been waiting for that because of Doge. And then the rest of it is about as always. Healthcare and social services, the biggest gainer, 78,000. Food services, a healthy 30,000. And manufacturing falls by 8,000, which was hinted at in the ISM numbers. So the economy at this point is hanging in there. We're waiting to see if there are tariff effects, but we're still waiting for a lot of tariffs as well. So the two things combined has... well, put it this way. Everybody can go back to worrying about Musk and Trump today and not the labor force.
Yes. That's what Matt really wants to talk about. Mike, we thank you so very much. That is Michael McKee of Bloomberg. We're going to be looking forward to the CPI data next week after we saw that wage report as well. Let's bring in BlackRock's Chief Investment Officer of Global Fixed Income, Rick Reeder. Rick, we got a lot to talk about with you today. I do want to point out, it's interesting, you see yields across the curve quite higher. You see the 2-year flirting with 4% again, the 10-year flirting with about 4.5 nearly again, not quite there yet. What do you make of the report this morning and the direction of travel?
So I think there are a couple of things that are you know, as soon as our report comes out, there's two numbers that I look at, and they're a little bit different than others. Is healthcare and education, leisure and hospitality. There's 139,000 jobs created. 135,000 of them came in those two sectors. We have a service economy. You know, the rest of it is sort of a little up, little down, pretty flattish. Yeah, an economy that's doing okay because the service economy is just doing all right. I have to say, I think that we'll start to see healthcare and education come off over the next couple of months. You need to see that, though, to open the door for the Fed to start cutting.
Guys, we're still monitoring. So far, with the hourly candles closure, we are looking incredibly bullish. Is there enough for a trade right now? No. There really isn't. We just need to let the picture build. Right now, I'm looking towards NYSE for now, just because of how the candles closed. This is telling me that there's a good chance that we may go for Wednesday's high on the DXY. There's also Wednesday's low on EU, right? That's what, so far, the information that I've been given. Which also means it's potentially good for gold if we are going to see lower prices as well. So that's pretty good news. And I feel like we may get a more concrete trade today on gold and other pairs, just due to the fact that Thursday's low is still intact and Tuesday's low is still intact. So there's a few areas, a few levels that we can work with, guys. Yeah, it's not bad at all. It's not bad at all.
People say the economy's going into recession.
It's not bad at all.
Look at the analog from 20, 30 years ago, and when you had a more commodity-oriented, manufacturing-oriented economy, service economies generally don't go into recession. Now, that being said, I did think you would get a month or two of a divot as in the economy.
It's not bad, guys. It's not bad. We just got to work with it, keep with it, stay with it. We'll be all right.
But you're seeing a little bit of that.
Ooh, look at that whoosh and push up from gold there. Yeah, I'm gonna chill. I'm gonna wait for NYSE, guys.
Related to AI.
Yeah.
Boy, I thought those numbers were pretty good.
If you got any questions, put in the chat box.
So, anyway, I think the service economy. I think people grossly underestimate the U.S. resilience because it is a service economy.
Speaking of the service economy and the point that it's been holding on so far, there's still a lot of uncertainty out there, not just in the job market, but of course with inflation, the tit for tat with tariffs. This week was another kind of wrench in the up arrow story. Right now, we have less than 2 rate cuts priced into the market this year. I recall a conversation a couple weeks ago I had with Rob Kaplan. He thinks maybe 1, maybe 0. Do you think that this is economy in need of rate cuts realistically, Rick?
So over the long term, I unequivocally think the Fed needs to get that rate down because the debt service in the country will be an issue if we don't get it. We keep rolling Treasury bills at elevated rates, so it's increasing the cost of debt to the country. And plus, you take the size of the deficit. So I do think they've got to get that rate down. The question is, when can they get it down? And today, I think it's really hard. Listen, I still think, and I've said this 2 months ago, I still think they would like to get a couple of cuts done this year. And you got to see that deterioration in some of the labor conditions to see that. But I think they'd still like to get a couple done, and then you get into 26 and maybe have the window to get it down with some lower inflation numbers. By the way, things like productivity, automation kicking in, that'll start to bring inflation down. But for now, pretty hard to have them do that. But I think they should. It's just I think it's going to take a bit of time for that.
Rick, hang with us. We're going to talk more with you about tariffs, taxes, and BINC. But right now, I want to turn to the other big story of the day, the public battle that we saw erupt yesterday between Elon Musk and President Trump. There are signs of truce in the drama that unfolded on live television and on Twitter in real time. The dispute began over Musk's displeasure with President Trump's big, beautiful tax bill a few days ago, and it escalated into threats against political and business ventures. Jeffrey Epstein was brought up. Joining us now from Washington, D.C., senior White House reporter Josh Wingrove. Josh, it does look like Elon Musk backed down also publicly yesterday in tweets to, well, one tweet to someone that nobody's ever heard of, and then one tweet to Bill Ackman. But President Trump doesn't appear to have a phone call scheduled for Musk today, as Politico reported earlier. Is that the case?
Young love, guys. It's hard to see it break apart like this. We all remember feeling so strongly at that age. The reporting right now for Politico is that there may be a call between staff and Musk. Our understanding that the president himself and Musk will not be speaking today, and the sort of détente seems to be coming more from one side, from Musk's side, than from Trump, who's so over it, to be a little tongue-in-cheek this morning. Apparently, they're trying to figure out where to go from this. On a more serious note, there are open questions here. So Musk has backed off the threat of the space program changes that would raise a lot of questions about the future of the International Space Station. Trump, though, has not really backed off, nor has he advanced his threat about taking a look at Elon's contracts, and whether SpaceX or any of his companies that have federal contracts. So that's sort of a weapon that's sort of hanging in the air here that we don't really know whether Trump will reach for again today. Wall Street Journal reporting that Trump is looking to ditch his Tesla. Remember when he set up that de facto Tesla dealership on the south lawn of the White House? Bit of an unusual moment. He bought one of them, a red one. It's been sitting in the parking lot of the White House more or less since then, still sitting there today, according to some other colleagues of mine at other outlets. So Trump is maybe that's the way he's looking to respond to this, getting rid of his Tesla. But this back and forth, these two had a very public-facing alliance, you might call it. I don't even know if it was a friendship. I don't know that anyone knows that, but it really has gone off the rails. Obviously, Musk looks like he's more willing to patch it up right now than Trump is.
Well, Josh, and Matt, how much did Musk give to the last cycle again? I feel like
$290 million.
Right. It was a lot of money, and now he's talking about the idea of another political party.
And
there's a lot
of money to us.
We're still ranging.
Not nearly as much
we got
money to him,
about 15 minutes to NYSE.
It's certainly a lot of money for the
We'll just
American
go from there, yeah?
public. And Josh, I'm really questioning what the intangibles are here. Yes, there are real things that the president could take away from Musk, but there's real havoc that Musk is causing when it comes to perception of certain plans of the Republican Party as well. He says he was going to back off on giving, but are there other ways he could look to influence the tax bill and then, by definition, the midterms too?
I mean, he's trying to get the tax bill derailed right now. I don't see a lot of appetite for that. Musk has a lot of influence and will have a lot of influence. One of his tweets yesterday was, look, Trump's only going to be in office for 3.5 more years. I've got decades left. Republicans should be careful about whose side they choose. But, it's a pretty empty room of Republicans right now who are lining up to align themselves with Elon Musk in a fight with Donald Trump, because Donald Trump can steer your primary very quickly in a way that Elon Musk's money can't, or at least as of now, they don't think it can. So, we'll see whether Musk tries to start throwing his weight around in the Republican Party on that. I think it's just too soon to say, but derailing the tax bill, forcing these actual conversations about impeachment, I think that's very far-fetched at this moment. There's just zero appetite among Republican lawmakers in Washington to go down that road, and so Musk might not have that immediate clout here. Trump seems to have a grip on the party.
Josh, I want to do a quick lightning round with you. So just yes or no answers, right?
Uh-oh.
Was there an EV mandate?
Kinda.
Did Trump need Elon Musk's support to win?
He benefited from it. I don't know that he needed it.
Did he ask Musk to leave, or did Musk's time just run out?
That's the multi-billion-dollar question. Right?
Are there really unreleased Epstein files?
I thought you guys knew that stuff.
There seem to be so many questions here that are juicy enough to dig into, but nobody really wants to wade there. Josh Wingrove, thanks very much for your time. Appreciate it. Reporting from Washington. We're going to be back in just a moment with BlackRock's Rick Reeder after the break. This is Open Interest.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
What mark-to-market assets do is it forces honesty into the situation.
We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
We're going to give you a check on those futures ahead of the opening bell. We are ending the week strong. There was strong economic data. The S&P 500 up 0.9%. A little bit of peace in the office, in the Oval Office for now, sort of, kind of. We are looking at yield soaring as well, not pictured here on the heels of that economic data. But the small caps also just ripping despite those higher yields. We are back now with BlackRock Chief Investment Officer of Global Fixed Income, Rick Rieder. Now, here's the thing. With Elon Musk's rift with the president, those Doge cuts that everyone was counting on to save all this money in the U.S. government, let alone the direction of the tax bill, how do you feel the prospects of those savings now?
All right, so
Well, I don't know that that was necessarily
half-hour candle is
instigated to
coming
really
to a
move the
close.
spending. Now, listen, when you look at the
We
bills
currently
going
have
through,
an inside
listen, as a
candle
bondholder,
right
you
now in the
certainly would
hourly.
like to see greater spending cuts.
I
You
mean,
know,
we're
think
probably going
going
to see
down
an
a path of the
expansion
deficits are too large. What has to
after
happen
this half-hour
is we
candle
have to
closes.
outgrow the debt in this country
So whether that's
because
to the
we're not
upside or to the
clearly not
downside,
making the cuts in spending.
we're yet to
Listen, I'm
see.
pretty enthusiastic about
But
we are going to
yeah,
grow as an economy. And
dollar's
actually, I think
still
as you get in
going.
the back half of the year, I am sympathetic to the idea of deregulation, easier permitting, et cetera.
I'll
Will
be back
create
here.
some
Give me a
motivation
second.
to growth. And as I said, I think the economy and the spend on AI and data center and energy, power generally is pretty good. So anyway, but what it does is it says, you have one side of the ledger, that's the spending and the costs. And so now that one is going to be tricky for a bondholder. That one is tricky, particularly for long end interest rates. We just have to now count on the growth. It's got to be better. I have some sympathy for, I think it will happen. But anyway, I always hate when you can only use one side of the ledger, and that's where I feel we are today.
Howard Lutnick had a now kind of infamous banana back and forth with Representative Michelle Dean, and he seemed to be insisting that tariffs are a negotiating tool, and eventually they'll be down to zero. But the CBO said the tariff revenue could be $2.8 trillion over the next 10 years. And it does seem like Donald Trump for decades has wanted tariff revenue to replace tax revenue. So how do you think it's going to turn out? And, if it is revenue additive, isn't that good for reducing the deficit?
So, this is all tricky in terms of the elasticities of where it comes from, which countries, et cetera, how's it implemented. Listen, at the end of the day, there is revenue coming in, and when you look at the tax cuts and then you have most of the cost cutting that's back ended to 2029, et cetera. So yes, you are bringing in some revenues. That does create some offset. There's ambiguity around who pays for it, or debate or negotiation of who pays for it. But yes, it's real revenues. By the way, you've seen it come in. In the last few weeks, we have seen those revenues come in, and they're not nothing. It is real money. So listen, it's tricky to figure out elasticities. And, I will say a couple of things around, the U.S.-China dynamic for markets is going to be a big one because of the U.S. as well as Europe have functionally outsourced manufacturing to China for years. How does that, how do you transition that? How do you transition things like apparel and other places where trade is so acute between those countries? So anyway, we've got a keen eye on the China one. That's the one that's going to be a big deal for markets.
Now, I'm really curious about how you're playing the credit markets more largely. If you look up your ETF on the terminal, BINC US equity. You can look up the holdings, and they're really interesting right now. I've got to say, I think I'm seeing a lot of Fannie and Freddie in here, Rick. In addition to high yield, I'm wondering if you can give us some color behind the trade.
You're pretty laser focused on that. That is right. So listen, I mean, I think this is a year, I mean, think about today. I don't think we're going to make any money of any significance in interest rates. What we're doing in the portfolio is we're running just under 3 years of interest rate exposure, 3 years of duration. Income works. And what we're trying to do is build a portfolio that's stable. We have added some mortgages. But what that does for us, it's got some spread to it. It's got some yield to it. And it keeps our credit quality high, keeps our liquidity in the portfolio high. But it lets us balance things like securitized assets, high yield. I like being a lender in Europe. You know, if we can swap back assets in Europe, credit, high yield, investment grade, you know, the portfolio is yielding about 6.7% today. And by the way, it's well into investment grade rated. Now that's a pretty good portfolio as long as you can balance quality with where you're getting some yield, keep your liquidity high. It's a pretty, listen, I mean, I think this is as good an environment as I've ever seen to try and generate income in a portfolio and do it with stability. You don't have to be way out the yield curve and take the volatility like you're seeing today. You don't have to be way down the credit spectrum in a triple C high yield, and just, you know, keep good quality, diversify it, and you know, keep a really nice yield. I mean, think about most pension funds, endowments, foundations. If you can hit 7 in stable fixed income, it's pretty good opportunity.
Love the detail, great intel. Unfortunately, we don't have time for a lightning round with you, Rick, but thanks so much for joining us. BlackRock's Rick Reeder there talking about the iShares Flexible Income ETF, BINC, BINC is the ticker. Still ahead, the view from the White House. Labor Secretary Lori Chavez DeRaymer joins the show with Anne-Marie Hordern. This is Open Interest.
All right, let's see how we're doing. All right, so dollar is just continuing to push up. EU, as expected, is dropping down. Right, okay. Yeah, man, this is looking real heavy. Real heavy. All right.
David Weston. Join me for the next generation.
Dollar's clearing up a little bit more now.
Stories of capitalism from business,
I'm just browsing to see if we can find a pair
Each week, we'll go on the
that
road
looks
to look at what lies
decent.
behind the headlines of today.
Okay, so
and what will
GU's had a
likely be the
really
headlines
nice play into
tomorrow.
here.
Above all else, it's a mission.
Had a nice play into here too.
To me, that's an extraordinary sign.
So we've had up, liquidity down, liquidity up,
More than
pull
what
back,
you need to know,
test,
it's what you need to think
pull
about.
back, test, move lower. Okay. So let's see if
Bring
we
you
can
up
get
to the
this
minute
low here.
geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
All right.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the
What are
Asia
we
trade.
working with here?
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Asia is at the forefront of some
Okay,
of
it
the
looks
world's
like we
biggest
might have an
stories.
inside
I'm
hour,
Sherry
but
Yan in Tokyo,
obviously we still
and
got
I'm
so
Heidi
much
Stradbrook
more of the
here
hour
in
left to
Sydney,
go.
where the trading day begins.
But the dollar
Here
is
in the center of
strong.
the
We're
action,
almost
get you
at
set up
Wednesday's
with
high
the
right now.
news and knowledge you need for the day ahead.
The demand is
This is why I prefer to wait for that hourly candle to close, man.
The opportunity of a century.
Join us on Bloomberg
Really strong
Days
here
at
for the
3.
dollar.
Weekdays only on Bloomberg TV. Context changes everything.
Really strong here. 5 minutes.
What is going to be the
So like we had a
consequence
5-minute
for
test
US
here.
markets?
Let's see if there's a similar picture on
We are
EU.
basically deep in the European earnings season.
We have a 5-minute test.
Take a look at how we're faring when it comes to
Yeah,
Asian
we
markets.
did. I guess so. We did. We kind of did, yeah. It's not as clear as it is on the DXY, but we did have a 5-minute test. Let's see.
Welcome back to Open
5-minute
Interest.
test.
I'm
No,
Matt
we
Miller.
didn't
Quick
have a
check on
5-minute
futures
test on
ahead of the
GU.
opening bell, and
Let's take a look at
we're
AU.
joined for news here as
AU's
Tesla
has
powers
been
the
holding,
S&P
okay.
higher, futures at least up 0.9%,
He's pulling
up
back
1%
down.
on the Nasdaq.
Yeah,
Maybe
he's got a lot of space to the
investors
downside.
don't want,
Okay, cool.
to be even this weekend.
So yeah, I'm still gonna work with gold for today.
The two most
I
powerful
think
men in America.
EU's
Now, some
really
more
is kind of
movers on our
gone.
radar. A few other things
Yeah,
that
I
are
think EU's
mattering.
kind
We
of
were
gone,
talking about
guys.
Tesla rebounding, now up 4.4% pre-market. Right
Unless,
into
you
the
know,
open,
maybe we get a
following
potential
yesterday's
pullback on the
massive
10-minute.
sell-off. We're going to speak with Pierre Ferragu at the open.
Right, so
Circle
what do I
still
mean by that?
soaring, Lululemon down. Stick with us. We're going to bring you all
You know,
those
I
stocks
may potentially
coming
look
up
at a
the opening
pullback
bell.
at this 10-minute
This is open
candle
interest.
and then look to short this further. Right, that has potential, you know. This is simply just a continuation play. Right, 20 pips. And then we can target Wednesday's low, which doesn't give us a 1 to 2R, but we can definitely stretch this a lot lower to potentially Friday's low. Right, that's possible. That is possible. Do I think we're gonna get down there? I don't think so, but let's see. You know, do I potentially think this is just breaking structure and becoming bearish? Like, there's just not enough evidence just yet, but I feel like Wednesday's low is a pretty good target. It's a pretty good short-term target. Gold's just straight blipping, guys.
In this facility, which is part of your $2 billion investment in the last 2 years, is a massive amount.
Yes, because we focused a lot on automation and upgrading our quality standards so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but it's producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are seeing a serious rise in futures. Right now, a 1% gain on S&P futures and on the Nasdaq, powered at least in part by Tesla after its massive collapse yesterday. Actually, over the past 2 days, we saw Tesla erase $200 billion in market cap because of a very public feud between its CEO, Elon Musk, and the President of the United States, Donald Trump. Opening bell on the New York Stock Exchange, the Generation Essentials, TGE, ringing the bell there to celebrate their IPO. Down at the Nasdaq, you have Omada, which is like a virtual healthcare stock. They brought the whole family. It's exciting, but no one cares about anything today other than the U.S. economy, right? We got the jobs numbers out, the granddaddy of all economic statistics, and this massive feud between Elon Musk and President Trump.
That feud that really roiled Tesla stock yesterday, now giving up a little bit today as Elon Musk really backs off the ledge here. Tesla is almost 5% right now, 4.7% higher at the market open. Remember, they lost $150 billion worth of market value yesterday on that very public SPAC. Tensions have cooled
Okay, I think gold's about to really go for it. I think gold's about to really go, man. I think gold's about to go for that low. GX is dumping down. Yeah, I think gold's about to go for it. This 5-minute candle looks really nice. I just added one more position to that gold short that I had on earlier. Just a quick scalp. The TP's at the low of the hour, so I kind of just want to see it hit. I've got the other entries still running though for gold, so let's see how that does. I think we'll be okay in this. I think we'll be okay in this. So Wednesday's high is still intact for now. This thing's catching life right now, can't lie. Oh, this 5-minute candle, man. It needs to close bearish. The 5-minute, what candle, what time frame was I looking at? It needs to close bearish. DXY looks like it wants to pull back right now on the lower time frame. Okay. That might ruin the party a little bit. But we're in this now anyway, so see how it does. But I do think we'll be okay. Should be fine. What do you guys reckon? You want to go for this short here on EU? Like, it's not bad. Do you know what I mean? It's not a bad short. Obviously, ideally, you want your stop a little bit higher as well. It's I'll be honest, it's not a bad short. It's not bad at all. Thing is, obviously, gold's got more potential to the downside.
So that's very interesting that you say that, because that's an extremely unsubstantiated claim that everybody is doing this morning, making this morning, including Grok and like GPT-4o, but that's not true. Like, we've all known for many years, people who cover Tesla and understand the economics of Tesla, Elon Musk has claimed for many years that electric vehicle incentives are not really beneficial.
I think this has got decent potential.
Without them. So I don't think
Gift says, I haven't looked at any pairs for ages except for gold and Bitcoin. What's Bitcoin doing anyways? Okay, so Bitcoin's kind of chilling. What a drop yesterday and literally instant reply, instant recovery. Crazy. Yeah, I think this is just a pullback, man. To head higher. You know, unless if we've just played into the 4-hour candle to short off again. Right, that's something that we have to think about as well, you know. We've tapped into the same 4-hour H4 again.
Volkswagen, Toyota, Honda, all of those together.
It's quite a drop.
$615 billion in market cap.
It's quite a drop. Gold's also pushing up quite aggressively as well.
They sell is worth about $16,000 in market cap. Now Tesla is worth $1 trillion. They sell is worth about $600.
All right, I'm gonna take a little short on EU, man. Why not?
Until yesterday's drop.
Just leave that there running in the background.
Tesla had lost a lot of value this year already as well.
It wouldn't hurt to see how it does.
Trump was really good for it anyway.
It wouldn't hurt at all.
That's true. Elon Musk has lost
Let's take it there.
$100 billion since Trump
Let's
came
take this short here as well.
You know, the moves in the market cap.
Like, it just wouldn't hurt. Do you know what I mean?
But I just think it's interesting that Tesla
I'm just thinking, why not?
just car sales. There's something else, and Pierre would have said, and Dan Ives would say, anyone who follows the company, there's something more, a lot more than just car sales here.
And in the next hour, we're going to be covering a lot of more of his private enterprises as well.
I look at this and I'm like,
now we are are going to now switch conversation.
Bro, this thing just looks like a cell to me, man.
Bloomberg's chief political correspondent and co-host of Surveillance with an interview
Like,
with
being completely real with you.
Well, we'd like to bring in the Labor Secretary.
Gold's just faffing about, man.
Thank you so much, Secretary, for
I feel like I should take a trade today, man.
this May report where the U.S. added 139,000
How much can I risk on this? Even GU, man.
decline in the size of the labor force, down 626,000, largest drop
GU's
since
not terrible.
2023. Is this because the
GU
administration
definitely requires
down
more.
immigration?
Oh no, GU requires less.
Thank you, Anne-Marie, for having me. We are excited. 139,000
Gift says sick and tired of gold, bro. It gets like that, man. I literally feel you, man. 100% on that.
Our goal is to grow the
Sick and tired of gold.
And the president has done a wonderful job in accessing companies to invest in the workforce, and we're seeing it across the country. So while jobs are continuing to grow, and we might see a decrease at the federal level, which is another great thing that we've seen 22,000 jobs leave the federal public workforce, and we're seeing it at the local level. So there's a lot to look forward to. There's a lot that we're excited about, and we couldn't be more excited for this economy in this third month in a row.
Okay, Nasdaq's pushing, man.
What do you think is behind, though, the drop in the size of the labor force? Well, what we want is to grow that labor force. We're seeing increases in
Yeah, I'm liking the look at GU, man.
In transportation and in healthcare. While the
I'm not
manufacturing
gonna lie
sector
to you.
is holding steady, what we're excited about is the focus that the
I feel
president
like
has on
GU
the
is
skilled
stronger right
workforce.
now.
Again, my part of this equation is to grow that workforce, and as we
Where will the
transition
target be?
through this
These lows.
process
So
of
1 to 2.
onshoring, and the president has done a wonderful job in negotiating some of these
Yeah, like GU
tariff
doesn't GU doesn't look too bad for a short.
this workforce is going to continue to grow. The unemployment
Oh,
rate
gold's
remains
wicking.
steady. A lot of economists will point to the fact that
Gold's gonna make me just keep slapping
jobs are plentiful,
trades on it, man.
workers are dropping out. Are you
Like there's a drop coming for gold. That's just the vibe I'm getting right now.
with immigrants? Well, certainly what we have seen in the last few months is that native-born Americans are the ones where the job growth is happening. That's exciting.
What's my GU trade? Is this short here? I mean, it's kind of moving a little bit here, bro, Brian. So if you want to take this, I'll take it ASAP. It's a 20 pip stop. But right now it'll be 22 pip stop. I think it's got potential to head down lower. Yeah. I don't think that's bad at all for GU. Like, I don't think, obviously, you know, I've got the stop here. A safer stop is going to be up here, right? Because I don't think we're going to come for this high here. But yeah, obviously, it depends on what R&R you want for that pair, for that trade. But I'm just waiting on gold, man. It's about to hit first TP. Go on, gold. Alright, DXY is pushing up a lot more now. It's looking better. EU, however, it's not moving. Yeah, Brian, so that's just a short setup here.
I guess my question, though, is if we have wage pressures re-emerging, is there potentially a cycle where we can see higher?
You want to look at the M1 for EU, we've got a bit of imbalance. Like, it's not bad. It's not bad at all, guys, man. Major short is not a bad idea at all. You know, for me, the trade setups that I'm looking for, I'm kind of going in heavy, so I want to be, you know, 110% sure on the entry. But right now I'm trading these other accounts, and I can just mess around with it a little bit. I think for one of these I gotta put TP. That TPs are that low. How much is that if I put it that low? Okay. Yeah, I think that's fine.
What is the president talking about when he says we weren't hot? Well, under the last administration.
So essentially, right, for gold, if you look at it this way, this 1 minute candle up top, yeah, it's pretty much held us inside this range here. Right, so I want to see if we can get a stretch. Yeah.
And he's correct. It is hot, and it is better than what we had in the past administration, 100%.
But manufacturing payroll numbers dropped 8,000 for the month of May.
But compared to the Biden administration, they've grown. They have continued to hold steady. That is the difference when he stays laser focused on the American.
So yeah, let's GIF says gold drop and BTC pump. Does it? Don't they do similar thing, bro?
We're seeing that increase.
Oh no, gold is dropping and BTC is pumping. You're right. I feel like, you know, for Bitcoin, you've got to look more at the Nasdaq. You know, it's definitely a lot more correlated than gold. You feel me? Or maybe you were just making a statement there, Gift.
Inside the labor force has changed given the fact that Elon Musk has now left the administration and also.
I just want to see how this 4 hour is gonna close. You know, for gold.
On social media.
Well, the focus of Doge was government efficiency. Again, that's what the president promised the American people, that he was going to save
There we
them
go.
their hard-earned tax dollars.
Dollar's flipping back down now.
Make sure that we're being efficient with their tax dollars.
That's just gonna hold gold, man. Oh, so annoying.
We can have distractions all day long. 139,000 new jobs, I think, is the primary focus today, because
sorry about that, guys.
To the everyday workers who get up every morning and understand.
I'm just gonna hold gold.
Their best interests at heart.
So even with Elon Musk not at the helm and also having this implosion with.
So we have this imbalance inside of here,
Even inside the labor department.
and then we have another imbalance inside of here as well.
Secretary of every agency, we're going to continue to Doge our own agencies, because again, for the American people,
Gold's got to come for this low, man. At some point, you know what I mean? It's got to come for that low.
Dollars where there's inefficiencies, and I'll continue to focus on doging my own agencies.
Oof, EU's just in such a weird spot. Like, I'm definitely more comfortable selling GU than EU. Gift says my beat got hit on gold. I'm not re-entered. Looking for a re-entry at 35.58. 35.58. Oh, that's all the way back up there, yeah. I mean, you never know, bro. I might add another position to gold, you know. I like that little imbalance play. It looks like we played into this 10-minute candle as well. Let me try a thing, man. Let me try a thing. Guys, in the chat, tell me EU or GU. Let me know. Which one should I take the trade on? EU or GU?
Really appreciate your time, Shanali and Matt. I'll send things back.
I'll take a trade on that one.
What a terrific interview, of course.
Someone tell me. How much should I risk? I don't want to risk a crazy amount. Sign. Light. Was that standard? Someone tell me. I'm gonna go in for GU.
What the market says, because that matters too. You have less than 2 rate cuts actually this year that already priced in. So
I'm in.
What the president is talking about, of course, it's because we have still seen an economy that has been hotter than expected. We had also seen a little earlier the president say that the economy is indeed.
I'm in, man. Let's see how it does. Straight into prof. That's what we like to see. I'm in. Just sold GU. Gold's moving. EU must be dropping too a little bit.
And President Trump is now sending Tesla shares about 5% higher, about 4.9.
Yeah, this don't look too bad, man. It doesn't at all. Gold's just doing gold things, man. You know how gold moves.
Taking a hit. Broadcom still down about 2.5%, and Lululemon and absolutely bruising nearly 19%, but still a broad-based rally here on our hands. Consumer discretionary leading the way. That jobs data certainly helps, Matt. We are seeing risk on heading into the weekend.
Give me a second, guys.
Shanali will disagree with me, but earnings season is coming to an end. Shares are soaring today at Rent the Runway as the company's inventory bet pays off. You can see they're going the other way of Lululemon and then some. We speak to Jennifer Hyman, Rent the Runway's CEO, next. This is Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Alright, here's what I'm gonna do, yeah? Gift, you're the only one in here. I'm gonna switch over to the Discord, so if you just want to chill, trade and chill, I'll just see you in the Discord, yeah, my bro. Money day.
Companies and trends shaping today's complex economy.